Hey traders, checking into the stock market today. We're going to be checking in on all of our major sectors. I'll highlight some rising wedges I'm keeping an eye on, and I'll go over a very poor trading morning. So S&P 500, I headed into the morning saying I'm scouting daily consolidation. After the 2-day big bull move after the CPI reaction, we know daily consolidation is inevitable, and I'm not comfortable making bull entries up here. I'm going to be looking for daily pullbacks and then scouting daily higher lows. And so nothing changes from that. We did see bulls recover from initial morning weakness. They ran up and broke the high of Friday, but no follow through. And after that bull break with no follow through, we rolled over and broke the low of the day with bears taking over into that close. It ended up being a bit of a rising wedge. There's a few more out there we're going to look at here, but something like that. Could even do an uptrend support line like this. Either way, a bear break shaping up the start of potential daily consolidation. We're going to be watching for hourly oversold conditions to see if it marks a daily high or low. We're going to be watching our retracement size, and very importantly, can bulls form a higher low and higher high post CPI? We know a ton of the CPI reaction was shorts covering, and if we set a higher low and higher high, that will show us continued money coming off the sidelines into the market for the bulls. And if we don't see that, and if we just fade back down and give back the majority of the pump, then we know that it was a short squeeze with a lack of follow through. We've got a little uptrend resistance line to keep an eye on. This is just standing out to me for the first time. Watching that little thing. We got a uptrend support line to be watching, something like that. But really just caring about price action and knowing that the low of today has to break tomorrow for bears to confirm that daily consolidation is underway. The NASDAQ was not quite as weak into the end of the day. It dumped as well, but it did hold the low. So again, we need hourly downtrends confirmed. Next time we bounce, does the NASDAQ set a lower high and lower low for that daily consolidation to be underway? And again, we will be scouting a daily higher low with lots of space for it to form. The dollar is trying to get a daily bounce going. It's an inside bar, but watch the 4 hour. If the bulls confirm the 4 hour uptrend, the daily bounce will be underway. We will be scouting a daily lower high to be the result of that bounce, just like we'll be scouting stocks to give us daily higher lows in many instances. But we're watching for that temporary shift that we know is inevitable and we know is a part of trends. Semiconductors also closed at the low of the day after a bull morning. So still technically an uptrend here on the hourly, but we're watching for signs of the hourly uptrend to be lost for daily consolidation to be underway to then scout a daily higher low. Healthcare. So healthcare is looking a bit like a rising wedge to me. This is the first rising wedge to keep an eye on. This is the 4 hour time frame just to condense things down a little bit, but that's what I'm looking at. That's a 4 hour rising wedge. Watching this 4 hour equilibrium as well, pretty much viewing this as a low, high, higher low, lower high. If we hold 131.40, we remain within this tightening range. Maybe we hold the support line for one more higher low and then break bear. Just something to be keeping an eye on as a visual guide. But essentially it's those trend lines as a visual guide. It's the price levels that I care most about and watching to see if bulls are able to remain within that tightening range. Financial sector, daily consolidation already underway. This was a lead bear today. Look at the daily RSI. We've topped out when the daily RSI gets right to or right above 70. And you can see, going back, how many times has this now happened? We've got 1, 2, came close, not quite, 3, and now 4. So again, that alone isn't enough for me to say I'm short. The daily RSI is at 70, but it's enough for me to say I'm scouting short. I'm watching the hourly uptrend. We failed to break high of Friday, and then we broke the low of the day. And the financial sector was definitely one of the harder sectors selling off into the close today. Even after hours, we're continuing to drop here. But anything above 33.80 is a daily higher low. Does hourly oversold mark our daily higher low? If it does, that shows strength. So we're watching for that. I'm not going to play that bounce. I don't trade the financial sector. I'm watching for it for a clue for the entire market to gauge the market health or the market weakening. Other rising wedges, watching Meta to potentially give us an hourly rising wedge. We know daily consolidation is inevitable here. We're up over 30% with no daily uptrend, just a higher low every day the last 6 days. So keeping an eye on Meta to be an hourly rising wedge. Amazon, we're scouting a daily lower high. Inside bar today, but we don't have a daily uptrend. That's very important to me. Post CPI, can names like Amazon give us a daily uptrend? Can Meta give us a daily higher low and higher high? Or is it just a short squeeze that then fades back down to the low? Tesla is a potential daily bear flag. Inside bar, simple statement, if daily EMA 12 is resistance, it's a potential bear flag. It's one of the weaker bounces. We've seen relative weakness persist over this bounce attempt. Much weaker than many other individual names. Cannabis sector, TLRY, daily rising wedge watch. Was watching it before the open, gap up open for profit taking. We'll talk more about the cannabis sector in a moment. Biotech sector, this uptrend resistance line from last week is continuing to play out. Daily bearish reversal candle, hourly needs to confirm a downtrend, but we're on the verge of daily consolidation, and it too has a whole bunch of space for a daily higher low to be the most likely result of the next pullback, but we're scouting for that daily consolidation. I'm looking bearish in the short term. I'm looking bullish fairly shortly after that, a couple days maybe. So cannabis, CGC gap up open, CGC hitting the highest level in over 5 months. That's very notable. It's tightening up on the 30-minute time frame in a little equilibrium. If it breaks bear, we scout daily consolidation. But today was just the perfect day for cannabis most likely scenarios from anybody that's been trading this sector for the last bunch of years. And I failed trading this morning, not with a big loss, but just with a setup that if I'm in my flow state, I smash today. And the distraction for me today was I was live streaming. I had people coming to fix my garage door. And so they came right at 9:30. Sweetie Pants is barking in the background. And it just started to get really distracting for me. Whereas if I'm not live streaming, if I'm in my zone, gap up open, you look short. In the cannabis sector, time and time again, that's the case, especially when you are up in the prior few days, 46%. Gap up for profit taking. Okay, so I could have potentially gone short there. But even if not, we look for first 5-minute oversold conditions to scout the hourly higher low. The 5-minute RSI got overextended. I made a long entry at 409. My game plan was I'm going to make an initial entry at 409. I'm going to make one more entry right around $4 if we keep dropping. And then I will place my stop loss based on the dollar risk that I am willing to take. We bounced 7%. I bailed on this trade before letting it play out because I was overwhelmed and just said, I don't want a position right now because I can't think straight. So rather than setting my stop under the low of the day at that point and risking a 15% day loser, I just exited break even. Had I done that, I would have benefited greatly from that bounce and I would have had a day maker. So I could have risked a 15% day maker and ended up with a day maker, but I bailed break even. So that's the first big mistake. Then we had a beauty of a 5-minute top fish. Shoot straight up 7%. The high of the day is 440. We reject by 1%. And then from there, I mean, just look at this volatility. This is why some of us traders love the cannabis sector. There's tons of volume and liquidity. We drop 7.5%. We go up 7.5%. We drop 6.75%. We go up 6%. More than that. You get the idea. Just a ton of opportunity in both directions. There's a 4% drop. There's a 4% bounce. So just a beautiful equilibrium on the 30-minute time frame with great range in both directions. So missed all that fun because I put myself in timeout. I did try a Meta short looking for daily consolidation. There was a 1-minute rising wedge on the morning, which did play out, but did not result in any follow through. And it was this one. So I went short, had a little bit of a green position, and then stopped out on the new high of the day. That was a 30, we'll call it a third of a day loser. So in the end, my terrible morning of trading is a 33% day loser, which is a win overall, just in the sense that I kept those losses small, but it was the missed opportunity where, again, if I'm in the zone and if I'm in flow state with zero distractions, today would have been a real good day just on CGC alone. But that's the way it goes. It's the first time it's happened to me in a long time. Most everybody in my life knows if the market's open, shut up. But it's freezing and I need my garage door fixed. There's a skunk who's been getting in my garage every day and leaving presents. Silver and gold are keeping their move up. Daily stair step the last bunch of days, so holding well still. 4-hour EMA 12, gold has held that the last 3 tests. Again, we know daily consolidation is inevitable here as well, and we know to be scouting a daily high or low. It's the same mindset as the broader market for me. It's just holding up stronger, which is a good sign for the bulls. The miners are as well, but look at the breaks. The high of Friday breaks the high of Thursday with no follow through. Today we break the high of Friday with no follow through. So what do? We scout a potential rising wedge. And again, the rising wedges just show us bull exhaustion. You did a great job, bulls, but you're tired. And I don't really love the resistance line here. You could tighten it and make it more relevant to the recent action, something like that. But just watching for a shift. If the dollar gets the bounce going, we're going to look for the metals to pull back. Oil bears making a statement. So as I've been talking about the last couple of days, if oil confirms the daily downtrend here, it's the first indication of a monthly lower high being set. So key support is in play of 84.70, watching that level very closely. And it's in play. If that were to happen, I'd be watching the energy sector to potentially see weekly consolidation. The energy sector is a weekly stair step the last 7 weeks, and we've gone up 38% in that period of time. Again, we know weekly consolidation is inevitable here. So just watching for signs of it. Bull break with zero follow through. Just seeing a little bit of bull exhaustion in a number of places. It's not going to be telling if we see daily consolidation. We know that's coming. I don't know if it's tomorrow, maybe it's the next day, but what's going to be telling is how much do we retrace? How aggressive is the dip buying? Does the daily uptrend remain intact with follow through to a higher high? If that happens, it shows me money coming from the sidelines and that the CPI reaction was not just a short squeeze. If we retrace over 50% of the CPI reaction, then we say, uh-oh, that was just a short squeeze, used up all that buying pressure, and not enough buyers stepping in to buy this dip. Natural gas, nice 4-hour equilibrium. When we last checked in, we were scouting a 12-hour lower high to be the result of the bounce. We got it. The bulls did bounce very significantly, but they rejected right from resistance this morning. Hourly RSI hit 70. Again, look at the historical levels. Just hourly RSI right aligning with price. It's not just the RSI, it's the RSI in tandem with the price resistance. We reject, we drop very notably about 5%, and now we have a 4-hour equilibrium. If this equilibrium breaks bear, the probabilities of a weekly lower high being set increase a good bit, and it's a potential weekly bear flag. And if it breaks bull, that tells us the weekly bounce is not done just yet. So that's where we stand overall. I am going to be keeping an eye on a CGC short for daily consolidation. We'll see where we open tomorrow. Ideally, I want a top fish play. So overall, scouting daily consolidation, and then after a couple days, scouting daily higher lows, watching how the market reacts to hourly oversold conditions. How much retracement do we see? And that's the game plan to start the week. PPI numbers tomorrow pre-market. So some more inflation stuff, could see some volatility there. Certainly not expecting the same volatility as what we saw with CPI, but definitely something to be aware of. Do good things. Thanks for tuning in. Hope you had a great weekend. Getting some of the first frosts of the year. Birds are all extra hungry. Greenhouse is frosted over. That means it's bone broth soup season. Got all the potatoes and onions and garlic And other hardy vegetables that store well, put them in a pot. I'm gonna use the greens from the greenhouse. Okay, good.